This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, welcome back to Invest Like a Pro. This is Joe Rabil. So I get a lot of questions about the MACD pinch play out of my book and my course. And there's so many different ways to use this specific pattern. I want to give you some examples, answer a specific question that I got last week. And I want to make sure you have a good idea of how to implement this and when to use it as a standalone and when to use it as a part of a bigger picture pattern. So let me go through some of the details on this. So if you want to learn more about trend and momentum in multiple timeframes, I recommend starting out with the book. I'm offering at a discount in a PDF format. In the book, there's a chapter specifically on the 2 timeframe pinch play, which gives a significant amount of detail in the MACD play that I'm going to talk about today. So let's go ahead and work into this. So I've got the XLI up. I like using the XLs as examples. I don't want to always use the spider. And, I could pick out a stock, but I figured, these are good instruments to use for trading. And I've gotten some pretty positive feedback from subscribers that have said that as well. All right, what I want to do is I want to talk about, I'm going to give you 3 or 4 different examples of a pinch play and how it would work and how I would handle it depending on the situation, because not all situations are made the same. All right, you can't. So what I do in the book, and I talk about this 2 time frame pinch play, it is in that chapter, I am giving you an exercise. It's an exercise in teaching you how to be disciplined. If you can do what I tell you to do in the book, by the end of that, you may or may not make a little bit of money depending on the market environment. But more importantly, you're going to have made a huge strides in your discipline as a trader. I recommend if you're ever having trouble sticking with your plan or struggling with, flying off the handle and doing trades that you shouldn't be doing, go back, read that chapter, go through the exercise, do 20 to 25 of those trades on a single instrument if you can do the time, or, on multiple instruments, just do 20 to 25 straight trades and do it exactly the way I describe in the book. And do it on small size. You don't have to risk a lot, but it's going to teach you how to be disciplined. It's going to go a long way to really help you move into that category where you become more of a professional trader rather than a novice who tries to pick out which trades he wants to take and which ones not. If something's meeting your criteria, you got to take them. All right, let's get into this XLI. So we've got this move to the downside, and then we get this little pinch play. Okay, we make a higher low, higher low. That's kind of the minimum requirement when these are going down. Now, there's a couple things that you want to be on the lookout for that gives you a little bit of confidence. Is the histogram should be bouncing up a little bit, moving up with price. If it's making higher bottoms as well, then you're on the right track for a pinch. Sometimes it's very subtle what we're seeing on the MACD itself. Now, I'm leaving the ADX up because it will have an impact on how you want to handle these. If you notice, there's air here, and I talk a lot about I don't really want to do something that has air, especially a pinch play that has air. However, if this line is rising, right, and there's no divergence, this red line's making higher highs with price to the downside, then I can take this trade even a little bit away because this line is rising, all right? It still goes back to the same rules you want to make sure you're using. Now, I will tell you this nice little tight pattern that's only a 2-bar rally, and it's not a big like it's not a big bars. It's not really wild action or anything like that. Almost always, almost every single time, it is going to be a zero line of the lower time frame is going to be a 0 line reversal with low ADX. Okay, if you see that and you have all the criteria that meets, then play it for a trade. Play it for a trade. In this instance, I don't know that I want to play for something big because look at how far down it's already dropped. You see what I mean? I'm just trying to get in and get out. And what I would tell you is just go for two 2 times. In the book, I say 3 times, but 3R. But just go for 3 times your risk, and go for 2 times your risk, and try and get in and get out. I'll give you a couple examples of when I use 3 and when I would use 2. But in this instance, we're going into some pretty good support. It's a tough one. I mean, do you really want to play this for a big move to the downside when the weekly is really kind of neutral? And we're getting a little stretched away on the downside on the daily chart. I would probably rather just play this as a quick trade. Now, if we go to the hourly chart, look at what happened. We move up and we just get to the 0 line. Look at how we have a low ADX condition after a strong one here. So the buyers are not that strong. So I can draw in my trend line. Now, in this instance, the trend line is not very tight to price. All right. So if I've got everything kind of going for me here and I want to take this trade off of this, meaning it's break. So here's the point I want to make. If there's no real strength here and there's no real strength here, and you want to go ahead and just take this trade right off the daily, then go ahead and do that. Just as soon as you take out a daily low, then you do, and then you take that trade. And then what I would actually recommend, again, now this is not the exercise anymore. All right, I'm talking about doing the real life trading. Do it two times. Look for 2 times, but also give it 2 ATRs, right? I mean, instead of using the high of the move, check that out. Use 2 ATRs on the hourly, see how close it is to the high. If it's below the high, then give it to the high, right? If it's not, if it's way up here, 2R, then maybe you don't have to give it the complete 2R, but I wouldn't just give it to the high of the move. Give it a little bit of extra room, especially when there's a little bit of space between price and the 18. So I've talked about this with my subscribers. I mean, I think most of them know this. I wanted to just give a little bit more information for someone who's only read the book. If you've gone through my course, you know this. There's a lot of detail in the course that's not in the book. All right. I went to another level on that. If you think that you read the book and you've watched these videos and you've gotten all the information, it's just really, there's just no way for me to put it all in a 10-minute video. So I break it up and I do a whole bunch of videos, and I think it's incredibly helpful, and I've gotten that kind of feedback. All right, let's go and look at these. So we've got 2 back-to-back pinch plays here. Pinch here, ADX confirming. All right, now let's look at this. We'll go back to June. All right, here we go. So we have our first pinch play here, and that's this taking place here. All right, now there's a couple things, and again, this is in. So if you've only read the book, then yes, I can see how you could have some issues with the MACD. But if you've gone through the course, then a lot of these questions should have been answered for you. There's overrun here. All right, so if I see this, and there's a couple gaps in here, and yeah, this is a pretty quality setup, really, still. And let me tell you why, because it's taking place after the breakout here. Do you see how this is all happening right after the breakout play? All right, so we're getting a breakout. This is really our first entry, but we have overrun. So when there's overrun and there's no 0 line reversal with low ADX, this is actually strong selling. I'm not taking a trend line break. I'm not doing the trade off of this little bar here. I mean, this is, if you take that trade, in this case, it worked. If you would have taken it, taken out that high, it would have worked and you would have made good money. But I'm just telling you, over the course of time doing this trade with what's going on here, you're going to get stopped out a lot. You are going to get stopped out a lot. So I'm waiting for this. We actually got green to come back and we got our pinch play. Now, if I'm doing this as a standalone trade, I probably don't want to do this. This is a 2 time frame pinch play. And why do I want to do this? Because it's already gone up 2 pretty big days. You're already up close to this high. You're kind of up against this. So I'm thinking, if I'm doing this as a standalone 2 time frame pinch only, that's all I'm doing it for, I don't know that I'm not interested. But if I'm doing this as a part of this, right, and I'm seeing what's going on the daily chart, this is a breakout play that's getting this first pullback, and it's got good momentum here, then I'm probably interested in doing it. And the way I would handle it is this. I would suggest taking the trade off this. Use 2 ATRs on this time frame. 2 ATRs on this time frame as your initial stop. But for your target, go and look at the ATRs on this time frame, because we've got a nice breakout plan, and see if you can't risk, let's just say $1 to make 5, right? I mean, if you can do that, then go for 2 ATRs on the daily, risking 2 ATRs on the hourly. There's nothing wrong with doing that. I talk about that in the book. It's the last example in that chapter on the 2 time frame pinch play. You can go for more aggressive plays when you have the bigger picture in your favor. All right, let's look at one more example. This is more of a classic, something you'll have happen more often. Here's your 3-bar pullback with lower highs. You've still got everything in play still. Everything looks okay. And this is only our second pinch play. Now, after we get 2, we don't really want to play the third. I don't usually, especially in this case, because it's stretched away. I know this is rising, but it's the 3rd time now, and looks like we're losing a little momentum here. So I'm going to go back to this in a second, but I want to explain why this, after we've gotten 2 following the breakout, we should be looking for more complex price action, complex corrective action after the 2 bull flags. Bull flag, and then look for a corrective wave, I should say. It doesn't mean we're going down, but we're going to go through something a little bit more complex, all right? So bull flag, complex. Think that way, and you can do that on a 2-minute chart. You can do it on any time frame. You'll see it happen over and over again. Now, when there's 3 is when you get a move down, and a lot of times it'll be an undercut, and you get a pinch here inside the range. Then you can still get 2 more. So there's 3 total. After you have that, now we want to look for more complex and stay away from the pinch plays up here, okay? All right, let's go back to this one. We got to move here, and we pull back to the rising 18. This is this here. We break the trend line. We overrun enough that I'm not taking a trend line, but this is not a 0-line reversal with low ADX. It just isn't. But look at what this does. This goes up and forms its pinch play right away. Recovers back. Green starts to get back and strong again. So I can take this 2 time frame pinch play. I'm still probably not going to just use this. All right. But you can. You can. In certain instances, I do want to use that. And this is actually not a bad time to do it. I maybe take back what I said. This is maybe an example of where I will do it. And let me tell you, there's a couple things that I like about doing it that way. Let me explain why. I'm doing this on the fly. I didn't have a lot of prepare information. I don't like going looking for the perfect example. I am just going and looking for these and saying, okay, I got 3 or 4 I'm going to go talk about. So we get this pinch. The reason why I like this is because we opened up and pushed to the upside. This is an hourly. This is all happening in the first hour. All right. So if this fails, if we get long here and it comes back down and takes out this low, we're obliterating the opening reversal pattern at the same time. We're probably also going to break the 0 line. You see what I mean? And we're obviously going back down below both moving averages here. And because this was tight to the 18, then we're most likely going to be breaking the 18 at the same time. See what I mean? So we've got a lot of reasons why we probably want to use a tighter stop here rather than giving it to 2 ATRs. You see the difference between that setting up here versus this one? To me, they're a lot different, I think, because this is playing out after a move to the upside. It's gone through this consolidation phase. And no, I'm playing the breakout play on the bigger picture. This is kind of the last, I would view this more as a trading play entry. And if I'm doing that, a lot of times I do like to play it a little bit tighter if the opening range is making sense to me. Use the opening range to help you in this instance. All right, so a lot of detail here. Hopefully this helps with any questions you have in MACD.